News.com.au. Let's get straight into it. Julia Lee, your thoughts on the first session of the week?
It was a bit of a slow day for the end of the quarter. In the end, we were up by 0.5%. Most of the sectors doing well, but the standout areas were really the materials and the energy sector. I think the market still thinks that we will see some sort of China stimulus, and that seems to be helping the market at the moment. On the flip side, though, we did see a sell down in some of the smaller telecom and the information technology stocks. In fact, iiNet was down around about 4%. We also saw TPG down about 1%, and then we saw Freelancer losing about 3.3%, as well as Technology One down by 2.6%. So I guess that was one of the areas which saw a bit of weakness, but generally it was green on screen, but not too much happening today.
Tips that you have. Julia, before we look ahead, let's look back. End of the quarter, how did we fare?
Well, the good news is the Australian market just managed to finish in the black. We were up by 0.8%, so less than a month. But compared to some of the other markets around the region, we fared fairly well. In fact, the Shanghai Composite in the first quarter of the year down by 3.5%, and we actually saw the Japanese market losing around about 10%. We were more in line with the US performance, which was up by about 0.5% so far. The London FTSE also not faring too well with a decline of 2%. So all things considered, the Australian market doing pretty well. However, the March quarter does tend to be a positive one for the Aussie share market. In fact, over the past 10 years, we've averaged a performance of 1.5%. So we've managed to come in at around about half that. So that makes it the worst March quarter that we've seen in 4 years since 2010. We have a look at the best performing areas. It was a smaller sector on our market which was the best one, information technology, which increased by 5.4%. Now that was because Recall had an outstanding quarter. Now Recall, of course, was spun off Brambles. That stock was up by a massive 15%. We also saw Carsales doing well, up by 6.6%, and we saw Computershare rising 6.5%. On the flip side, the telecom, staples and the materials sectors were all the ones that underperformed. And in terms of best performing stocks, G8 Education still going great guns, up by a massive 60% for the quarter. On the flip side, though, the Reject Shop was the worst with a fall of 40%. So altogether, the Australian market faring pretty well, especially compared to the Japanese and the Chinese markets. But hopefully we'll be in for a bit more of a positive performance in the second quarter.
Market?
I guess if you're buying the index, mostly what you're buying is the financial stocks and the material stocks. And I guess it's the material stock which is the most volatile at the moment. Expectations around the China stimulus are still there, and we're seeing extreme volatility in terms of commodity prices, especially because of what's happening in terms of the US and the unwinding of quantitative easing as well. So it is quite difficult to take a view just on the index at the moment because of the volatility that we are seeing in terms of the material space. I think the second half of the year will be a lot calmer for the index, and we'll concentrate more on earnings when we come into August. And that's the thing about this quarter. We saw an extremely good performance in February when earnings came out, but then global factors took over, and it was the worries over the US, over China and Crimea, which really dictated market sentiment. I think as we come into the second half of the year, we'll be refocused once again on earnings, and hopefully that earnings growth will continue to come through for the full year, which should help to support the Australian share market. One of the things that we've seen over the past month, of course, is some bargain hunting happening, and that means some rotation out of those higher PE ratio stocks like SEEK. There's just been a little bit more cautiousness, although we have seen G8 Education and those companies making acquisitions to grow as well as growing organically, doing quite well. So I think the first half of the year may be a stock pickers market, but coming into the second half of the year, I think generally we'll see market earnings helping to support the